A lot of retail investors who missed this rally and who've been waiting outside of the market for the last 1 year are going to wonder if it's time to get back in at a high. So, should they be doing anything on results day at all? Is this the time to get in? And if yes, how should they do it? Those are the questions we're going to ask Dhirendra Kumar. Dhirendra, thank you so much for joining us. Of course, the market has reacted to those exit numbers and we saw the rally from yesterday carrying on to today. Given the outcome, how do you expect the market to react over the next 1 week?
It's very difficult to guess where the market will be in next 1 week, but we should not forget that market has become very optimistic with the likely outcome. Exit polls is not poll election results, but yes, it looks like if the election result is going to be very much on these lines, there is reason to be optimistic. There was a very long election campaign in which things were spelled out, and that was very much in line with the market's expectation. It actually drives optimism because it does not refer to any kind of big policy framework being changed or anything. It is just focused on execution, and that is something which the market is very pleased with. Also, the market is very pleased with, if Mr. Modi is going to be the next Prime Minister, perhaps people have fallen for a very hard-working Prime Minister.
But the big question right now that all retail investors are asking is, what should I do on results day? Should I be reacting in any way at all to how the market moves?
I would say that, there are broadly 2-3 kind of retail investors. Investors who have never invested in the market, they need to be very careful. They need to work on a plan and start investing, start with a balanced fund. The people who invested and they got disappointed and they were on the lookout for an opportunity to get out of the market. I think this whole revival of the market should give them some pleasure, and they should get they should be hopeful, and I think it'll make sense to be sustaining their plan. And then there is a kind of investor who has been waiting on the sidelines to get into the market. They should take a lesson here, that don't jump into the market just because you're waiting on the sidelines and the market has gone up. Work on a plan and make your plan work. So what I'm referring to is all kind of investors, they should devise a plan and stick to that plan and stay on course. And any investor who is following that should also not get excited about the market, and you have been doing 5,000 rupee SIP and you have 50,000 rupee lying in your bank account. You are tempted to invest at one go. Don't do that.
Well, there are a lot of investors are writing to us right now saying, if this is the beginning of a bull run that we're going to see over the next 1 year and we want to invest some money in the stock market, how should we do that? Is it a lump sum? Is it the SIP? Can we start now, or is it too late to start?
No, not at all. In fact, if this is the start of a bull run, then it is not going anywhere. It will not end tomorrow, which means that stagger your investment over the next 6 months, 8 months. Even if you have 5 lakh rupees to invest and you want to take a chance, don't take a chance. Spread it over the next 6 months, 12 months, so that because market is if it would have been ideal if you invested in the market about a year back, about a month back or 2 months back, which you haven't done. So in that case, trying to profit from this rally which has started, it doesn't make sense. Yes, it makes eminent sense to devise a plan and work on it and stick to it, and you will be getting opportunity. By averaging your investment over the next 6 months, 1 year, you will be getting opportunity to buy on dips as well.
Well, the other question, of course, is for investors who are already in the market right now. Should they be increasing their allocation to equity, taking advantage of what we're seeing at this point? Should we at some point rebalance our portfolios as well?
No, not at all. If you're working on some kind of allocation, if you're working on an allocation that 70% of your money will be in equity and 30% of your money will be in fixed income, then as a result of this whole surge, maybe in December if you would have rebalanced, today your asset allocation will go wacky. So it'll be quite out of sync. So today will be a time to and if you are invested in a balanced fund, your balanced fund will be rebalancing by selling equity and putting it in fixed income on a daily basis. So don't try to exploit this opportunity, because the whole turnaround has happened without much of a notice, or without much. It has come as a surprise, and we will have big surprises coming our way. Yes, this is the initial euphoria, this is the initial optimism, but when reality sinks in, I think the market will present opportunity, market will never go up in a nice smooth line. So don't bank on it. Have your own plan and stick to it. Market will be very erratic even in the coming weeks.
But the other problems that we have been beaten down sectors, funds that invest in power, infrastructure, real estate. We know investors have had trouble with these funds over the last few years. Do you believe that these funds will now recover? And do you believe that it makes sense to take positions in these sectoral funds now?
Yeah, I'm hopeful that power and infrastructure might get a boost. I'm not very sure about real estate sector, because here the problem is entirely the creation of the companies, the operating companies in this sector. So I don't think there will be a revival of the real estate sector as such, but because all their wrongdoings or all their the leveraged position of their balance sheet or things might not get fixed quickly. But yes, infrastructure and power has reason to be one has reason to be optimistic. That has been the big election theme or slogan as well, and I think it is also reversion to mean. Last 5-6 years we have seen a kind of a full cycle for these companies. These companies were great companies, and some of them just went on scaling up their got onto a scale of operation by borrowing money, and they are trying to fix those things. So one is that the company is fixing their affairs. The other is optimism and the likely scenario, optimism about the outlook for these companies. So that should be the primary trigger.
One last very quick question, Dhirendra. What's your view on banking funds right now, given the performance of the Bank Nifty over the last 2 days? Do you believe we'll see these banking funds recover as well?
Yes, the Bank Nifty has gone ballistic, and the optimism is entirely driven by not just a government change. Of course, that is one of the reasons. It is also because the banking stocks or the public sector bank has come a full circle. Banking is going to be a mainstay of if economy revives, if economy turns around, then banking is going to be on the forefront. Then we see a big turnaround in the public sector banks, simply because looks like they came to their lowest point in terms of NPA, in terms of their stock prices, in terms of their outlook, and looks like any economic turnaround can give them a big boost. Third, the governance issue. There is a small chance that these public sector banks will be managed little differently and little more efficiently, and that can cause a huge difference to this sector.
All right, Dhirendra, many thanks for answering our questions. Roughly put together, Dhirendra saying, do nothing. If you're a retail investor, just continue your plan. I think that was the answer to
your investment allocation. I think that's what always works in the long term. I mean, there's short-term noise, but if you're a typical retail investor, you got to just focus on your investment planning,
and if you're doing a monthly SIP and you've been doing it for the last 1 year, then you're definitely in a profit, so you should be happy.
Yeah.